scariest. Massachusetts housing market crash just got worse. Are you looking to buy or sell a home in Massachusetts? Well, you might want to think twice before making any moves, because the scariest Massachusetts housing market crash just got worse. In this video, we'll be diving into the real estate market data for the month of February, analyzing trends in single-family homes, condos, and multifamily properties. Despite the expected decrease in sales and increase in prices in most market segments, there was one segment that defied expectations. And if you're a real estate enthusiast or just curious about what's happening in the market, you won't want to miss the intriguing trends we're about to discuss. So, stay tuned until the end, because this is one video you don't want to miss. In February 2023, the average sales price for 1,699 single-family homes was $653,000, representing a year-over-year decrease in the number of sales by 22.8%. This aligns with our marketplace expectations. However, home prices were up by 3.5% compared to February of 2022, exceeding our predictions. It's a familiar story of boy meets girl. While sales were down, prices were up. In February 2023, sales levels were slightly higher than those in 2011, which has become the new normal over the past 6 months. However, the year-over-year sales comparisons are expected to remain unfavorable for the next 6 months, like comparing a Rolls-Royce to a Cadillac. The first half of 2022 was comparable to a Rolls-Royce in terms of sales performance, and despite the decrease in sales activity, prices did not decline. The surge in inventory that was expected did not materialize, as year-over-year inventory has only increased by 812 units compared to February 2022, which is the third lowest in recent history. Moreover, the inventory levels in 2023 have been decreasing and closing the gap between 2022 and 2021, as can be seen from the single-family inventory chart. The crux of the matter lies in inventory levels, which continue to play a crucial role in shaping the story. By way of comparison, the last time sales figures were similar to what we're currently experiencing, home prices actually saw a rise of 0.41 in 2011. This puts our current increase of 3.5% in a favorable light, and it's all thanks to the inventory levels. In 2011, inventory levels were a staggering 673% higher than they are today. Let that sink in. So, what's the bottom line? February was precisely what I anticipated, and it falls squarely within the new, sustainable normal for my market. For my bearish friends who are holding out for a price correction, this is yet another month that proves waiting on the sidelines has its costs. Prices aren't falling, and inventory isn't surging. It's worth reiterating that a surge of inventory is necessary for price corrections, and this factor sets our market apart from other markets in the southern region of the country. Despite the surprising year-over-year increase of 3.5% in prices, my prediction for 2023 still stands, that the market will remain flat due to potential headwinds, including low inventory levels and rising interest rates. Inflation data released in February 2023 suggests that interest rates are unlikely to decrease anytime soon, making the market more fragile. However, after 2 months, the condo market appears to be doing well. If you're enjoying updates on the Massachusetts real estate market, please subscribe and like the content. In February, 825 condo units were sold in Massachusetts for an average price of $601,000, and this market saw a decline in sales and pricing as expected. Nonetheless, there is a peculiar trend in condo pricing that we will discuss shortly. In February, sales were down 24.7% compared to the same month in the previous year, which was expected and consistent with January's 24.8% sales decrease. The sales levels were the same as in February 2012, when 810 condos were sold. In 2012, over 17,000 units were sold, and the condo market appreciated by 3.6%. Despite prices being down 3.2% year-over-year in February, there was a fluctuation in prices over the past few months, with an increase of 4% in October 2022, 8.1% in November, and 8.8% in January 2023, before falling by 3.2% in February. The reason for this trend is unclear, but it may be due to an outlier condo sale that skewed the average price for the month. This marks the 15th consecutive month of year-over-year sales decline, which is likely to continue until the middle of the year. March's appreciation transaction numbers are yet to be determined, but the fluctuations in sales and prices can be compared to a roller coaster ride. On the other hand, inventory increased by 17% in February 2023, compared to the same month in the previous year, with 1,683 condos on the market. However, this is still 15.6% below inventory levels in 2021, and 386% below inventory levels in February 2012. The data so far is limited and choppy. From my perspective, the market seems stable, although only time will confirm this. The year-to-date average sales price is $640,934, which is slightly higher than the average sales price in 2022, which was $638,017. Moving on to the multifamily market, it is the market that I am most bearish about. This is because the primary attraction of multifamily properties is for investors, and their investment decisions are heavily influenced by financial considerations. If investors purchase multifamily properties that result in monthly losses, it does not make sense financially. Unfortunately, due to the cost of debt, this is what many buyers would experience. Even buyers who purchase multifamily properties with the expectation of having tenants assist in mortgage payments may end up subsidizing the tenant's rent. While some individuals consider multifamily properties a financial benefit, this is not the case for most properties in the current market. A video will be available to discuss this further along with numerical breakdowns and an explanation of how this works. In February 2023, there were 268 multifamily properties that sold for an average price of $651,332. Although the multifamily market has experienced negative growth for the past 2 months, this month it broke the trend and experienced a 4.32% increase in the average sales price year over year, which is excellent news. In February 2023, sales activity in the real estate market experienced a significant decline of 41.4% compared to the same month in 2022 when 457 units were sold. This is part of an ongoing trend, as year-over-year sales were down 39.7% the previous month. This decline in sales can be attributed to buyers struggling to meet the high asking prices set by sellers as a result of the costly leveraging of properties. When investors cannot meet their desired sales numbers, it does not make sense for sellers to lower their prices, especially when they are enjoying good monthly returns due to rising rents and locked-in low financing rates. The decrease in sales is not unexpected given the circumstances. The increase in interest rates has resulted in a decrease in demand, which has in turn led to a decrease in supply as sellers adjust to the market conditions. When there is no urgent need to sell, there will be no surge in supply, and without an increase in supply, there cannot be a big price correction. Despite the decrease in demand, the Massachusetts multifamily market's pricing has remained strong and has not collapsed due to the lack of a significant surge in supply. Again, the key to understanding the whole tale is inventory. In order to get a better understanding of the inventory levels, let's take a look at what they are like for multifamily dwellings. At the end of the month of February, our inventory of multifamily homes included 585 different units. The current inventory levels are 12.5% higher than the levels that were present at the same time the previous year, but they are still 17.1% below the levels that were present in February 2021, when there were 685 multifamily units available on the market. The present inventory levels are tied for second place with the lowest level seen at any point in recent history. Again, I am of the opinion that the market for multifamily dwellings is the most depressed of all markets. It is the weakest, but because there is such a restricted quantity, I will refer to it as the weakest in the weakest possible terms. I agree, that seems to make perfect sense. Thank you for watching this deep dive into the Massachusetts real estate market for the month of February 2023. We hope you found the insights we shared both informative and engaging. Despite the ongoing challenges in the housing market, we believe that staying up to date on the latest trends and data is essential for making informed decisions as a buyer or seller. And as always, we will continue to provide updates on the Massachusetts real estate market as new data becomes available. If you enjoyed this video, please don't forget to hit the like button and subscribe to our channel for more real estate insights and analysis. And if you have any questions or comments, feel free to leave them in the comments section below. Thank you for watching this video on the Massachusetts housing market crash. Don't forget to like and subscribe for more informative content.